Good day, ladies and gentlemen. It's Akomaye again, and I'm here to take you on my strategy. All right, I'm trading SMC strategy, but I've simplified it to a very simple, detailed piece of work. All right, I'm going to explain this strategy in such a way that even a layman will be able to relate. All right, so if you open your trading view, the first thing you are looking out for is the direction of the trend. Having said that, I'm going to take you on 3 simple steps in this video. First will be directional bias. Secondly, I will take you on points of interest. Thirdly, lower time frame confirmation. Remember these 3 basic steps, right? So let's get down to business. When you open your trading view, what do you first look out for? The first thing you look out for is the direction of the trend, right? Is the trend in an uptrend? Is the trend in an uptrend or is it in a downtrend? That is what you look out for when you first open your trading view. So what you are seeing on the screen here is basic market structure. So I'm going to explain what this means and how you can read it and how it's going to help you in your trading activities, right? So first thing first, this is how the market moves. So how do you know the market is in an uptrend? When you approach your chart, first of all, you look out for the current break of structure. Do we have a break to the upside or the downside? That is the first thing you look out for. First of all, you can see here that in this phase now we have, let's look out for this place here. Let's imagine we come and we see the market in this area, right? What are we looking out for? We are looking out for the fact that the market has given us an expansion. After the expansion, it gives us a pullback. This pullback can also be called a retracement. But then when the market is pulling back, what we are looking out for is to catch some trades within this place, right? Is to catch some trades in here. We trade the 15-minute time frame, but we use the 4 hours time frame to determine the direction of the market, so we can trade in accordance with the big guys. As we all know, we are not the ones that move the market. Your $1,000, your $2,000 cannot move the forex market. So what do? You look for a strategy that helps you trade with the banks, trade with the institutions. As simple as that, right? So having said this, let's move further. When the market gives you a pullback, what you should be expecting is what? An expansion to the upside if it is an uptrend, right? Once this expansion is being gotten, you mark out your order block so that you would clearly understand the direction of the market. So this is our order block, right? After this expansion, what do you expect next? You expect what? A pullback. After the expansion, you expect a pullback. And here is the pullback we have gotten. Immediately you start getting this pullback, immediately it gets to somewhere around here. You kindly mark out your what? Your swings. All right. Once the market gives you an expansion, you mark the lowest point of that expansion. When you mark the lowest point of that expansion, we are going to call this what? A swing low. So when you mark this up, this will be a swing low. Let's imagine all these things now from here to this place have not happened yet. So the only place we are focusing on is from here to here, right? Is this place now we are focusing on. So when the market gives you a swing low, mark it out clearly. The lowest point of this what trend, you mark your swing low. This place is not yet a break of structure. Firstly, it is your swing high. It is only when price complete the pullback phase and gives you an expansion. It's only when this expansion cross this current high that we can call this place what? A break of structure. When this expansion cross the current high, this current high, that is when this becomes a break of structure. When the pullback phase is still premature, it is called a pullback. This will be your swing high. What will you be waiting for? You'll be waiting for if the price is going to come here and then go to the upside, or it is going to come down here and then break to the downside, right? So you move this one to the next swing high. Why are you leaving these lows here? You are leaving these lows because you have a new low that has put up a break of structure. So this place here becomes your swing high. Then this place becomes your what? Swing low. And all the things you are focusing on is how to cash good moves within this trading range. You can catch the pullback or the expansion. Any of them, you can catch them. All right, with a good strategy that I'm going to show you at the end of this video. This is what I'm explaining here is directional bias. I'm going to explain points of interest, then I explain lower time frame confirmation, which is very, very important. Lower time frame confirmation is the most important aspect of this video. I wouldn't love you to miss, right? So you start looking for trades around here. When the market is trading in this place, you look for sales, look for sales, look for sales. When it's going back up, you look for buys, right? It is as simple as that. Once the market crosses this place here, you will know that this high has been what taken out. We now have a what new high. So it will be very, very easy for you to look out for the next thing, for the next move, right? So having said that, once you see something like this, it means it's complete. So this place here becomes your break of structure. You have a new swing high. Mark it out. Always mark it out. Keep your charts clean in order to avoid mistakes. Keep your chart very clean. This place is no longer our swing low, so we are looking forward a new swing low. We are expecting that when the market pulls back to a certain level, it will give us the pullback, then an expansion to the upside to give us another break of structure. Realistic, right? But sometimes the market does not move always like the market has two phases. It has the bullish phase and the bearish phase. So when the market moves bullish to a certain point, it has to give us lower prices. When the market refuses to respect the pullback and give us higher prices, and instead of doing that, the market gives us lower prices, it means the market has shifted from bullish toward bearish. This swing low becomes our change of character. The character of the market has changed from bullish to bearish. All right, so we are going to indicate this immediately. This becomes what? A change of character. Change of character is represented by a church, which is very, very normal. It's just an abbreviation, right? It shouldn't confuse you. This becomes a change of character. So what after the change of character, what are we looking for in the market? It's very, very simple. 90% of the time, we are looking for what? A pullback to this place now. This swing high becomes what? The highest point of this trend. This swing high becomes the highest point of this trend. So we expect that this current trend now don't go above the swing high and take out the swing high. If you take out the swing high, it means that the market has actually changed its direction. Again, it now changed its direction to the upside after changing to the low side, which is very, very normal in the market. Or take out this high, it's a different thing entirely. But if we expect that when the market comes here, it gives us what? Lower prices. Alright? As simple as that. And once you see these lower prices, what comes to your mind? You know that now you have I know some of you will mistake this for a change of character, but no, this is a break of structure, a bearish break of structure. That is a break of structure to the downside. Once you see this break of structure, then what does that tell you? It tells you that the market is now what? Bearish. So you mark your new swing high. Remember, at first we were marking swing lows because it was a bullish market. Now we are marking swing high because it is what? A bearish market. You mark your swing low. You mark your swing low, right? So the only place you are looking to trade out from is what? This trading range. The only place you are interested in taking your trades from is from this place here. From this place. That is what? The lower time frame, right? So what you are expecting is that the market should come to this place, gives you an entry around this place, then what? Gives you a continuation to the downside until the market is ready to change structure to the upside again. We are always trading in accordance with the market. So this will become what? This swing low will become a break of structure. Then this our swing high that was once here will become what? A change of character. Hence the market has come and given us lower prices and then taking out the current high, turning it into a change of what? Character. Okay, the basic way of reading market structure. Now this is for the pros, for the benefit of people who are just aspiring to become forex trader, people who are very, very new to the system. I'm going to use a local method to explain this in a way that you are going to understand, right? Then later on we refer it back to the forex market. But if you have advanced and passed this level, you can forward this part I'm about to explain, right? So as a newbie, you are going to school. Let me say you are going to school, right? You are a student, so you are going to school. So this is the point where your house is, and this is the point where your school is, right? So you move from your house, from this place here, you start moving from your house, you get to a certain point, you decided to buy snacks on the way. So you branch to a shop and buy snacks. This is the shop, right? You could branch to the shop from the road you're supposed to pass and buy snacks. After buying your snacks, what do you do then? You continue your journey. You get to a certain point, you remember that you need to buy a pen, a biro, a writing materials, right? So you branch to another shop again and then get your biro here. Now, what I want you to understand is that this distance you have traveled, the distance you have traveled from here to here, you're not going to travel the same distance back to this place to buy your pen, because you bought snacks from this shop already. So you'll be looking for a nearby shop that is currently at the location you are to buy your biro, right? Now, that tells you that you are not coming back to this place again, forward ever. You are moving forward, right? So after buying your biro, what next? You keep on moving towards your school, right? So now, when you get to a certain point, you discover that okay, you need to buy a hard copy notebook, your writing material that you use and write in school, right? So you branch to a nearby shop again and get your book. Now, what I want you to understand is that you are not coming here any longer. You are not coming here for anything again, because you have already passed this place. If eventually you come back and then pass this place, it means that you are now returning back from school. It means that you have gotten to school and you are now coming back. If not, there is nothing that will make you come here. You will always look for a close by shop to buy your textbook and then continue your journey, right? So after you buy your textbook, you now further to get to the school you are going to. This is your school. Now you receive lectures, you carry out all your school activities, then you are done with school. What do? You look for your way back. You start coming back. Now, what I want you to understand, that break of structure has already stated it clear that this person is done from school, is going home. You understand? Those people around that shop now, they saw you in the morning when you were going to school. So if you should pass that place again, it means you are going back home. It's very clear now, right? That is a typical example of how the forex market moves. The same thing all of the time, giving you lower prices, then eventually gives you higher prices. So it is as simple as that. It is not complicated. If you understand this alone, you are 50% closer to your destination. All right. So now, having said this, I'm going to show you a more realistic. Now, let's take the black line to be a 4-hour time frame trend. Let's take the red line to be a 15-minute time frame, right? When the market is moving like this in 4 hours, the 15 minutes is moving like this. That implies that the 15 minutes is giving us a detailed information of the current trading range, a detailed information. And how do we read this information? This is what we are going to look at right now. Right now, I'm going to be giving you a more detailed explanation now. When the 4 hours time frame is moving like this, 15 minutes time frame is moving like this, giving us a series of changes, which indicate a change of character. Then, if the 4 hours time frame wants to give us a pullback, the 15-minute time frames will give us a pre-information, a detailed information that the 4 hours time frame is about to retrace back. It's about to come back and mitigate some zones, right? Then it gives a 15-minute time frame gives us a change of character. This is where we come in to catch the move. You get? This is where we come in to catch the move, right? This change of character from the 15-minute time frame is the one that tells us that the 4 hours time frame is ready. Let's go. We will now start looking for ways on how to sell the market, how to follow the pullback and make money. Remember, we are only here to follow the trend. We are not here to make any decision. It will start giving us ways of how to follow the pullback and come to the downside, right? So we look for entries from here, look for entries from around these places, then take our sell and make money. Simple, right? So now, after saying that, let's go down to business. Once we see a change of character from the 15-minute time frame, we'll start seeing series of break of structure. So when the pullback is complete, now the 15-minute time frame will give you alert again that 4 hours time frame is about to expand. The retracement is done, the retracement is over, the pullback is over. We're about to have an expansion. So the 15-minute time frame will quickly change character. Right? This will be what our change of what character. Then from here now we know that the SOD 4 hours time frame is done pulling back. It wants to change character. We hop onto the chart. The same thing 90% of the time, right? And then we look for ways to buy the market. We buy from here to the 4 hours time frame zone. As simple as that. It is not hard. It's not the hard stuff. Forex is not hard, but people explain it to be very, very difficult. You understand? So now it is the same thing. 4 hours time frame is going again. We follow from 15-minute time frame. Follow. It's just like that 90% of the time, right? Once the 4 hour time frame gives us an expansion, remember to mark your 4 hours time frame break of structure to the upside. It gives you a clear break of structure. It gives you a clear bias of where the market is going to. Once you see that the 4 hours time frame has changed character, what do we expect? Now we mark out our 4 hours time frame swing low. You kindly wait for the market to what gives you a pullback. Now what are we waiting for? We are waiting for what? A pullback, right? From in the 4 hours time. The 4 hour time frame is giving us pullback. What are we expecting from the 15-minute time frame? What we're expecting from the 15-minute time is that the 15-minute time frame to confirm to us that the 4 hours is going, so that we will follow the 4 hours and go. You get? Tell us that the boss have full. The boss want to start traveling our direction. 15 minutes tell us we'll start going. Simple as that. We go when we get here. 15 minutes tell us that the 4 hours time frame is done again. We hop onto the chart. Just like that, 90% of the time. It's just always like that. Just look for a way on how to read it correctly. Now, this thing might not be clear to you like this. That is why I use the line to explain. Now, after using the line to explain, we are going to go into the live market now to break it down to you, to apply all these things I have said here on the live market so that we can see how far it works. Right? Let's go down to business.